The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday between 11 and 12 for the Tiger Technicians Hour. 877-927-6648, number to call. On this 14th day of March, hey, tomorrow's the 50th, Ides of March tomorrow. Very interesting, most appropriate. Let's go to the numbers. E-minis are down 5 at 2015. Look at this very interesting chart. This is a leg E with a possible peak E today in the daily chart of the E-mini. The weekly chart's had a spectacular single leg up from 802.50 to Friday's high of 2022.25. That is fabulous. Just a really tremendous move to the upside. And you've had the technicals confirming up until now. Very interesting period we're coming into this week. But I would say that going to the first to the second week of April, probably we're going to know a tremendous amount about where levels are going to be set on the upside and the downside for the market over the summer months. Very, very important. I would even think that where we are right now going into the end of the week is the start of a critical period, because the E-mini shows you just above. This is actually still the March contract. I'll change when I get the message to change. So this is very important because it's above the 200-period exponential moving average, that orange line at 1990, just a little high, 1996. I'm looking, I can see now what's going on. Let me expand that because it was crossed over and I couldn't see it. No, 1993, good. So you've got the 9-period exponential moving average just about to cross at 1992, that 200-period moving average. Important moment. MACD is still good. Stochastic is not. It's still at 87%, really nice, but that's not 95%, and it is starting to turn down. So within that context, what I would say is, let me just move this over if you don't mind, just cut it right across. There we are. So it's very important. The parameters that we need to watch this week are going to be absolutely imperative, because within the context of the move that we've had, which is really, we've just gone above a 50% retracement. What happens next is going to be very, very important. I still see residual strength at this particular time. Reason why I was about to go short, we tried it on Friday for a tiny loss. I was about to re-enter, and I thought, you know what, I want to be buying. I'm not really interested right now in shorting other than really quick, just a short term into maybe Wednesday. We'll see tomorrow or how I analyze it overnight. So let me go through these things. The 120-minute chart has gone to a peak D, and it's got a cup formation. And what's really important, if I look at it in the context of the Dow chart, which has made a new high today, 17,220, and today we went to 17,225. Fabulous. We just extended this even yet again. So it's relentless, and it's really important. Good. And what's really important about this is that the day is young, and we've had a couple of gyrations, and those gyrations are telling us that there's not enough bad news. To sustain a move to the downside, you've got to have, number one, bad news. Number two, that bad news has to be interpreted negatively by the market. In fact, it could be any news. If it's interpreted by the market negatively, and the volatility index, which at this particular point is trading at 17.27, it's up 77 cents. If that volatility index starts to go over 19 into the 20s, you get triple-digit down moves. Just keep it as simple as you can. So far, the upside still looks like it's active. What I want you to do is to look at the 120-minute Dow chart, which is at a peak B. There's no other way I could count it. And since it's at a peak B, you would expect that we could go to a leg C, and we went to a leg C this morning at that 25 level. So 17,225. Then there should be a bit of a pullback, one more jab to the upside for slightly higher high to get your D, and then we might be vulnerable to some kind of pullback into the Wednesday 2 o'clock Fed announcement. That's the way I'm looking at it. Remember last week we were looking for weakness early in the week, strength later in the week. So I think there's something very similar going on now. So this is what I show my subscribers to my opening call. Wow, sent out a lot of charts over the weekend. And the charts basically said that we should have a Chapman wave trend gauge pullback early in the morning in the Dow, then a rally attempt, and then we're going to see where the parameters are, but we could just be in a wait and see mode at this particular point. So I have not changed that opinion. Now let's do the numbers. So thank you for our hosts early on, starting at 8 o'clock this morning, John Logan, then Larry Pesavento, then Tom and Tommy. This is going to be a very important session in that I want to show you a number of things. And before I go any further, I just want to go, the Dow is down only 4 at 17,208. The S&P is down 5, a little bit of a differential there. The S&P is a little weaker. The S&P is at 2017. The comp index is down 1 at 47.47. Gold is down. I sent out my over the weekend. I sent out this thing saying I think that gold. There's no reason why gold should not pull back as the dollar rallies a little bit. In fact, some of the rotation that's going on in the commodities is going to be a very important aspect early this week. So gold is down 12. What I said was 12 or 13. Right there. It's down 14 at 12.44. Silver's down 13 cents at 15.470. High-grade copper is still in the 223 area. It's down 80 cents. That's quite a bit. Crude oil is at 36.80, down $1.60. And you've got bonds at 161, 25, 30 seconds, up 18. And the dollar right now is, if I can just find it, the dollar's up 32 cents at 96.50. The reason why I wanted to go through those very quickly, we've got a caller online. We've got Tim in Denver. Oh, not on the phone. Tim is looking to short the IBB. Tim, I'm going to make a couple of recommendations. The IBB, trading up 85 cents at 262.79, is suggesting that there's just enough residual strength. We were trying to go long. We are short from way back. Still remaining short, but on a trade, we wanted to go long. And then I said, you know what? There could be a kind of a mixed market. I thought Friday's action in the IBB was really good. How about holding off? Tim, don't do anything just yet. I'll be talking about this again tomorrow. But in the meantime, I absolutely concur with you about going short the IBB. Let this bounce just continue a little longer. The 120-minute chart says there's a chance that the IBB is going to test. It's a 260, up 66 cents. It could test 264. Let's see if it can test the 264s. If by the end of the day, the IBB weakens and the general market is going to go into a hesitant phase, a pullback, stair-step pullback, going into Wednesday's Fed meeting, I just don't want you to be in a position where after this huge move to the downside, you go short the IBB and it is right where the IBB is showing that it's in a rotational basis. It's saying, hey, it's my turn to have a bit of a bounce. So I'm going to say to you, hold off. I don't think you should short it right now. I think there will be a time. I'll talk about it. Well, I won't be able to talk about it tomorrow. I'll be out. I'll talk about it Wednesday morning, and we can already prepare for what might happen with the Fed. But I'm just going to say to you, it's a little risky right now. Only in that there's a residual strength. So I'll be back. Basil Chapman, Tiger Technicians Hour. Dow's down 7. I'll be looking for your calls.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So I just wanted to say to Tim, Tim, there will be an opportunity to short the IBB if, in fact, either by the end of the day or tomorrow, if at about this time, but somewhere between 11 o'clock and 1 o'clock, the IBB is underneath 260.90. You might want to just start a small position. Now, if you're going to be using the BIS to 200% short, I would not get a heavy position. You might be missing a fantastic opportunity, but if the Fed, just whatever reason, if there's a response that's very positive on Wednesday afternoon, I believe that the IBB will respond, especially if it looks like rates going to stay stable or come down, and then that should favor the IBB a little bit. So it's had a huge. I just think that the IBB is stuck between the trading range, and the best is to go long towards the 245-ish area. At some point, you're going to be wrong, but 245 with a 5-point stop, or 243 and a 3-point stop. And as you get closer to 270, if you can get to 270, you start thinking of shorting because it's going to go from an H to an M pattern. That's the way I'm thinking of it right now. Hope that helps you. All right, now a couple of things. I mean, for months since I went to the show in Boston, I did talk about it briefly, but I kept saying I'll come back, but the market was so interesting. I just didn't want to waste time. I wanted to just quickly go back to the auto show and to say that I spoke about the finish of the General Motors cars, that there were those little things that irritate me in very expensive cars, but also it started off in the Chevy model. And it was like the trim, the little caps at the end of the trim just didn't quite fit. They were too big. That's all. It's real simple, okay? So you put your hand in, as the door's closing, it just kind of scratches. It doesn't scratch you to cut you, but it feels abrasive. Wrong. You cannot do that. You certainly can't do that in a Cadillac. You just should not. I mean, whoever does the quality observation, I don't know what they're thinking. I mean, come on. Okay. Now, yeah, this is the issue. I wanted to mention that Buick has got one of the best ratings, not only of American cars, but in general. It's like rating number 5 in quality and repair, etc. And I told you every year, the last 3 years, Buick, I've sat in, it's just gotten better and better. I find it sound a little boxy, but I think it's great. And the new convertible looks great because it's based on the Opel from Germany. We once had an Opel back in South Africa. Now, I think they might not call it Opel, they call it Opal or something, but it's OPAL. And now they're using that as the base model for the convertible, which looks really nice. Now, here, this is what I wanted to say. Chevy products, I could not believe how good. I looked at the style, I looked at everything, and out of the show, out of all the automobiles in the show, the one that actually surprised me the most, it's about the second year, but it's really the first year that I can actually make a statement to say that I think that Chevy has done a tremendous job. The whole Chevrolet division, right all the way through to the Corvette, has had a tremendous, I like what they've done. I think the quality has improved tremendously. My biggest complaint, not that they're going to listen to me, but it's a complaint, is that the Chev in that second strata, that's the, I'm trying to think of it, that is the Chevy, Malibu. The Malibu area. I think they've kind of overpriced. I think if they had come back down $2,000, not only would they be winners, they would more than make up the difference in the number of sales. This is my thinking, and I have no idea. I'm not an economist. I'm not a salesman. I don't know anything about that stuff. I'm just saying I think that Chevy has an edge. And just like some of the Kia and the Hyundai have kind of overpriced themselves, not so much the Kia, but the Hyundai. It's just overpricing itself, although you see a lot of them on the road, nice-looking cars, good cars. I think that the Chevy division, the Buick division could really make a big dent, a really big dent, and Ford the same thing. So I'm looking at this, and I want to just go through this. This is not just a talk about my impression of automobiles, but if you look at the Ford is holding quite nicely, having come off the low in the 11s and is now trading at 1332. The chart looks okay, but look at General Motors. We do not own it. I keep saying maybe this is one of those that I wish I just bought back in the 28, 29 area and said, no, I'm not touching it. This is it, because American cars are going to be bought by Americans. We're becoming more insular. You can hear that in Trump, which leads me to the very next thing I wanted to talk about. And General Motors chart is actually looking quite nice. So this is very interesting. How do you square this away with a lot of talk about the economy being so dire? I see a whopping change. The mentality of the country is changing. Even Hillary Clinton is talking about bringing jobs back. This is something she never discussed. Come on, she never discussed it. So this is very important. And I think it's part of a cycle that I want to talk a lot more about, and I'll be going into it later in the month in a webinar. But in the meantime, what I'm looking at right now is that there are certain things going on which suggest to me that the big crash, I don't think it's coming just yet. That's not to say that I think at this point right now we're going to go to all-time highs, but I am impressed at what's been going on. So that's number one, and that leads me right to the very next thing, which is I had a question, which was sort of a statement. You had spoken about 3 weeks, or maybe it was 4 weeks ago, you had said that the way you've analyzed politicians in your chapter wave form, and you had said Trump had made a peak F-top. Peak F-top, and I think you said a leg C in the weekly chart. And yes, I think that the weekly chart is still showing strength, but the daily chart has gone down. Now, I don't know. Polls and all sorts of things happen. There's the big election tomorrow. But that's the way I'm looking at it, that for the last 3 weeks, it's been lower highs and lower lows in my daily chart. Of course, I have no daily chart. This is all mental. But my daily chart of Donald Trump. And that is important because it says that we might find that some things are going on that are going to be a negative, and that weekly chart is going to become even more important. How do I dissect it? I don't know if I'm going to have time, but I hope this week to do it on a graph. I'm hoping. I hope doesn't mean that you can do it, but I hope to do that at some point. Now, I want to talk about what's happening in the commodity index. So if I look at this, let me just go to this. This is the TRCCI. My contention has been for a very long time that commodities have been in a bear market and that we've been in a deflationary period. And that if there was going to be inflation, we would see that, and it would knock my Chapmanization of our bond yields for a loop, and we would see a big progression in the jobs numbers. And good jobs invariably means that there's more buying, and you can see that reflected in other areas. So I'm going to talk about that in a moment, about what I'm looking at in the commodity area, because remember, we own a commodity that has wheat, soy, gold, oils. I'll be back in a moment.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I need to go to this because it's an email that came in and it's really part of this whole theme that I'm looking at. And Paul says, I was amazed to learn we now have more guns in America than people. I think the next boom growth area is going to be building of fences. Are there any investments that you would see in this? Hey, that's a really good point, and I'll deal with that in another over the week. I'll talk about it because I have thought about that, in fact, and I don't think that most people would like to hear it who have voted for gun control to find out that in fact during the last 4 or 5 years, gun sales not only are at record levels, but they are, I mean, it is beyond record levels. It's beyond anything that anybody would even have imagined. So it says a lot of things, and we'll talk about that. So we won't do it now. So just going back into the question of the statement about Donald Trump. Remember, it's not political. This is just looking at what I consider to be a chart in my mind that I do with most politicians over the years as we're going into the election period. And we'll deal with that. Okay, and I just wanted to also say that the two other things that I wanted to mention right here. One is I meant to talk about it both Thursday and Friday, Alta. You remember I had a call, I think it was Jennifer from Wellesley, talking about Alta. Now, I have to be quite honest about this because what I said is, if you're going to buy it, you can start a position here. I wouldn't get too big in the position, but I would start a position, and I can't remember offhand what I said would be the stop. I'm absolutely sure we would have been stopped out because I believe that she called and we were in the 168-ish, 167 area, and I'd said that you could start a position. It's looking good, but I don't like the daily chart. I won't like the daily chart if it arches over. Lo and behold, it arched over and went all the way to 158.21. I'm absolutely sure that I would have not had more than a 2 to 3 point stop on that when I spoke to her. I don't know if she was in it, but earnings came out on Friday and bam, it goes from the Thursday close of 163, hit 158, went to 163, and kaboom, rocket ship opens at 186.60 and goes to 192.06, trading right now at 190. Chart-wise, I would have just said you have to wait for earnings and you have to see how the market responds. But in terms of the reason why I said to you could start a little position is because I said to her that no matter how I count it, I've got a peak C, and it just doesn't look like it should fail at peak C. Weekly charts hardly ever fail at a peak C. Alternate count G, C, yep. But this really looked like it had all the ingredients of a C. Then it goes all the way back down, and the kaboom, it's making leg D. Finally, you got that leg D. So I don't know what you did, Jennifer, but congratulations on keeping your eye on it. And I'm not sure that you would have been holding on, not based on my recommendation anyway, because you would have had a very small 0.5 or something percent stop or 1% stop. Okay, that's that. Now let's go on to the other thing I wanted to talk about. Chevy Alta and oh, fantastic. Over the weekend, purely by chance, we just took a break and we went zipping down. We went to the Museum of Fine Arts, members of the Museum of Fine Arts. They've done a great job. And what do they have there? An exhibition. And what do I always talk about? What have I spoken about for the last umpteen years? That we should be going into an era that replicates the 1920s. In the clothes, that we should have those big wide-brimmed hats. Men will be wearing white shoes, puffy. A lot of material, incredible material, not just the little skinny stuff that you had in the 70s, a little thin little whatever it was that covered you, if you had anything covering you. This is a period like the Victorian era, because I think we're going into a mix of a Victorian era and something else that I will talk about later on. And lo and behold, they have this incredible exhibition at the Museum of Fine Arts in Boston, and it's clothes. And when I say clothes, it's using materials like light, LEDs, and everything's flashing, all sorts of things. Most importantly, the design of the clothes is exactly like that late 1920s. Remember, in fact, I had spoken about it just last week about the era of the Downton Abbey in the last episodes when they were wearing in the late 1920s the clothes that they were wearing, and lo and behold, they were absolutely incredibly designed. Some you couldn't wear; they were already works of art. This is that period of excessiveness where redundancy becomes important. Remember, I talked about the 1969 cars when the market made a major top. Why? Because the fender in the front and the fender in the back weighed as much as the car. Total redundancy. Yep, putting on the Ritz. And we're going into that era right now. You start to see the cars have kind of V-shaped fronts. The designs are beautiful, sometimes excessively so, but at the same time, they are very expensive to repair. That's what I call redundancy. And I think we're going back into that phase. And that says to me somehow or other, by hook or by crook, will be going to new highs, and the public that are out the market will come into the market before we make the major top, one that says capitalism is going to be under increasing pressure, not for a year, not for 3, not for 5, but for a long time. With that cheerful news, let's go back to the market and say, this is what I was looking at. So Alta, we just did. Now, I want you to say the IYT, which is the iShares Transportation Average ETF, went to 138.87 after hitting 114.94 on January the 20th. Very nice 14-point move. That's a 10% to move to the upside. But wait a minute. It went from 167 down to 114. 50 points. I say 50 points is a little bit more on the downside. So what are we looking at? We're looking at the potential for a U-shaped pattern that says a little bit of a consolidation going on. Weekly chart has improved tremendously. And I would have to say that I cannot even consider that we're going to go to all-time highs unless the IYT, trading 138.09, down 6 cents, is able to pierce all the resistance in the 140 area and start to hit this downtrend line and then close above it sometime between now and the second week of April. And that is 144. It needs to go only 6 points higher. 144, we have 6 points higher, but those 6 points are really critical at this level. It'll also take the IYT above the 9-period exponential moving average in the monthly chart, which is really important, which will help the stochastic and the MACD. That's that. That's very important. I want to look at the IYR. That's the REITs, right? Had a fabulous rally, way above the 9-period moving average in the monthly chart, way above it in the weekly. This is a single leg A up. These single leg A's to the upside have the potential to be extremely powerful, or they could be failure patterns. And it becomes a failure pattern. This is a G, trough G. It becomes a failure pattern if the iShares Dow Jones US REITs index starts to break. It's to 75.37, down 31. If it starts to break, if it closes under 70, that's a big move to the downside. But the reason why I have to go all the way, but not to the 73 or 71 where the moving average support levels, I want it to be able to break the 50% level to close under that. And that'll say, uh-oh, failure pattern. Look at the one that happened right here. Not a single leg A. It went to a B and a C, but it pulled back and then it went over the 9-period moving average, made an arch formation and came down. It's used a lot of time since January of 2015. So when something uses time and some price, then you're going to say, is it ready now for a major turn to the upside? Or is this just merely another bounce on the way down to lower lows and lower highs? I'll be back. Basil Chapman, Target Conditions, our Dow's down 8.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
I had a question in the den. Folks, you must try the den. It's just a great medium. It's just there's so much advice, there's so much information that you can use there about NVIDIA, NVDA, trading at 32.40 up 17 cents. So it's got a leg A, B, C. It looks like it. Oh! I didn't finish that. So what I said to Jane the Den. Let's see. I'll tell you right now. Let me just finish drawing this so you can see what I'm looking at. The pattern is the Chapman wave falling, acts as a declining wedge formation, breaks out. If it just breaks out into the 32.50 area, just 11, 12 cents higher, then I think it's going to make its leg D now, going to 33.07 or higher. So it's right. This is a very important moment. Now, looking at the weekly chart, this is the same sort of thing, but there is the potential for a V-shaped pattern going back to the 33.94 high the week of the 1st of January. Most importantly, NVIDIA was one of those stars, I mean, for a long time. Back in 2000, was kicking around. 2001, it made a high of 24.22. I think it split a couple of times. And then it made another high back in 2007 at 39.67. What I said to Jay was that if at any point it's able to close above 33.94 to make that new leg D in the monthly chart, there's a real good chance that over a period of this year, certainly over the summer, it could try to work its way into back to the old heights. This is what these charts tend to do. They go back like a magnet once it passes a certain point, like a 2/3 or more retracement. Then all of a sudden you're looking at the old high. So I like it. But what's really important is that it's got a gap in the daily. And in any time during the month of March, if it starts to break down at 32.38, if it goes under 30, then you're looking at that gap in the 29th. So 29.65 was the low of the 19th. And you've got to look at 27.92 is the high of the 17th. So there's a gap there. I would not be surprised if it goes to a new high, a new recovery high, just in the 33 area. Then it takes its time and pulls back, turns that 29 area into great support, and then it moves even higher. So I'm looking at it. Now, the question was, should I go long? You could go long now, but I'm pretty sure that even if it goes to 33.20 right now, it's coming back to where we are. So you can only treat it as a short-term trade and then raise your stop. So you could nibble here. My thinking is that maybe Wednesday afternoon, Thursday, if the market actually holds after the Fed and doesn't break down, have a 300 points smash to the downside, and this holds very nicely. This is one of those that you want to look at because fund managers will go for the best of the best. This chart is the best of the best. Now, a couple of things I also promised I would look at for questions. Gold. The reason why I was going to go short gold via one of the 2 or 3 to 1 inverse, and then I pulled it right off. I pulled it off just like I pulled off my going short again, the S&P. There is a difference, though. I think gold is going to have some kind of a retracement I wanted to look at it. I wanted my head to be clear. I don't want to be switching at a certain point from short to long. We actually are long via an instrument that has all the different commodities. But I didn't want to have this mental thing of saying, I'm short, but I'm long. I just wanted to say, hey, I'm looking to buy because it's a leg C in the weekly, which is probably going to be a peak C in the monthly, about 1267. 200 period exponential moving average, 200 period moving average at 1267. That's kind of my target for a magnet. So we're going to pull away for that just in the short term. And I've got a left side, right side price time match. In fact, that's the reason why you're only seeing one thing right now. Now you'll see them both. Yeah, look at this. That's what I was looking at. That there's a chance. And maybe this is really a great short, just for a very near term. 1191.50 was the low on the 16th of February in the continuous contract. If gold by tomorrow is breaking 1242, then my target would be that it can go down to that. What did I say it was? 1219? 1196 area. Between 1210 and 1196. That would be my target, and that would come in by the end of the month, 29th of March. It just needs a little time. Gold stocks have had a fantastic move. I just wasn't sure. Maybe I still might do it. I just wasn't sure. I really wanted to get into shorting the gold right now. Not only that, you've got the Fed meeting coming up. These things move very quickly. I just wanted to be protective of our gains. We've got some fabulous gains. And I wanted to just be in positions that I feel is the trend that I really am following closely. Okay, so that's gold. Next question was, is this a failed breakout in crude oil? Well, look, the USO is trading down. This is a peak E as I see it right now in the Chapman wave. But the stochastic is really strong at 90%. The MACD is good. I just think this is just a bit of a pullback in crude oil. I wouldn't be saying so the USO, United States Oil Fund, trading at 983, down 37, had a higher on Friday of 1029. I wouldn't be surprised if this area right here between 963 and 952 gets filled, and then it goes kind of sideways. When I look at the dollar, yeah, it's a nice move in the dollar, but this is nothing. Up 37 cents, 96.54. I think that the dollar still has more consolidating to do. So that's what I'm looking at here. So I hope that answers you, Julie. So a couple of other statements that were made. Actually, there's one that was very important. So Jerry, wait. Paul says, Jerry is selling his fleet of collectible cars. Is this the top of the market? Not really. You'll be surprised how long the automobile collective area can go on for. When the market makes a stop, fairly soon afterwards, you see the collecting of modern art. Remember, this is the period we spoke about 2 years ago. I said, we still have to get to the modern art where prices are paid for stuff that you just say, hey, my 2-year-old could do that. That's because we don't understand it. And maybe they're great works, we just don't know. But people are paying prices where they have no benchmark. It's just what the market will bear. We haven't quite got there. And modern architecture. So I think it's a sign, but not the sign. It's where he puts his money. Does he put it into the stock market? So EEM, let me just do EEM right now. EEM, this has gone up to an F. It might have recycled, but this is a really nice move in the EM, which is the iShares Emerging Market Index, and it's in an F/B in the daily, leg B in the weekly. It's a good start to a move to the upside, and all I can say is that I would give it time. If you're long, I'm going to say stay long, but you want to take a little bit off if you take our Thursday's low of 31.99. But in the meantime, it's holding well. This is going to be, the EEM is part of the whole smorgasbord of what we need to look at this week on Friday at the close to say, hey, this is what's working. This is what's not working. This is the way the Fed, look at the TLT. TLT had a sharp move to a leg D. Now it's making a possible trough D. The MACD is down, but it's starting to show a little bit of sign of support. I've got another indicator within there that's showing some support. And the stochastic is higher than it was when you made the trough C. So this is really important. Do we continue the Japanization of our bond yields, meaning they go to zero? Or is there enough strength in the economy that the Fed is going to look at those numbers and say, we are going to raise another quarter point in another 3 months or 6 months or whatever it is? My thinking right now is they're going to be very nervous. They won't do anything. My original thinking was that they'll do nothing in February. In March, they might make a statement saying there are some signs, but there's not enough sign yet that we want to continue raising. And let's see if they can do that. What does the Fed raising rates have to do with the TLT? I don't know. It's a good question. I'll talk about it when we get back. Number of questions came in. I'll do that when we get back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, good point was made with an IM. Says, laughing out loud, Fed only controls short-term rates, so really that's where we see them making an impact. When Fed raised TLT was at 122 and it went to 135, now pullback. Yeah. It's the thinking that that makes the change, I believe. We'll see. All I can say is that if rates remain low, a number of things should happen, but they haven't happened when you're looking at, say, Ryland. Is that the one that's gone? Has Ryland taken over? It's disappeared as a stock. So Toll Brothers is down 41 cents at 27.96. So the housing sector charts are just horrible. I mean, I don't know. Let's see what happens. So the USO, just to go back to that, where I was, USO is trading at 984. I think it's a consolidation, and that kind of coincides with what we're looking at in gold. And And let me just show you soy because, as I say, we have an ETF that has soy. It has wheat. Look at that beautiful chart. I spoke about it the other day. I said left side, right side, price time match. Soy should start to move, although that's not my area of expertise. We really want to be listening to Larry. And he looks at the different patterns, and you want to be listening to Andy Hecht, who talks about the actual cycles and what happens within the fundamentals. So soy's going towards 902, which is the 200 period moving average, and wheat was not as good a pattern, but now it's starting to show a lot of strength. It's at B, but it's only a lot of strength. It hasn't really made a change in the weekly. I think that this is the one that's lagging at this point. But these darn things move really quick when they start to move. So I'm going to be watching it closely. And as I said, gold is in a consolidation here. Now it's down, 1480. I don't see any reason why it can't come back another 40 points. 30 to 40 points, and then we'll see what happens. As I said, I just didn't want my thinking to be changed because I do believe I want to be buying some of these gold stocks, etc., on the next big pullback. The question in the den is XLE. Now, important, let's have a look at XLE, making a peak F/C peak right now, and a leg B. So yeah, all the charts in the commodities look the same. Good move up. Moz was the question I had. So XLE has support at 59.92. It's at 61.50, and it has strong resistance in the 63s. However it gets there, the 63s is where I'm going to be watching it closely. And MOS is Mosaic. Remember, we used to talk about this years ago. There was an unbelievable move in the monthly chart. It just, month in, month out, it made new highs like potash. Look at that move going to the high. That was the Chinese high back in 2008 in June. It went from somewhere in the 415 area to 163 in June. So then it pulled back a little bit. It pulled back from 163 to 21. That's quite a pullback. It goes to peak D, and now it's making this inverted staple look. So yeah, it could move. 29 Mosaic trading at 29.35.65. I would be looking at it on the next pullback because that's going to be important. Is the next pullback going to break support and make an Eiffel Tower straight up, straight down, or is it going to find some support? And is this the area you want to be looking at? So let me just do this. Got a whole bunch of questions and statements. Where you see the dollar going, just a post. I really can't do that. I'm going to try to do that Wednesday. As I say, I will not be here tomorrow. At least in the morning, I'll be gone. So, okay, here we go. VIX index, VIX.X. The volatility index was up a little more. It was up at 1767. It's trading at 1727, up 70 cents right now. I showed it for my subscribers. I did a lot of work for subscribers over the weekend. I showed how the VIX index had pulled back very sharply and that there could be a rally. But what was happening was that the technicals were starting to fail. So that says to me we've got some support here. But if the volatility index after the Fed meeting goes above 1850, 1890, goes into the 19s, we've got to watch out. We've got ourselves quite a consolidation coming up. So let's just leave it at that. This is just a day of digesting the big gains of Friday. I wouldn't do anything more about it than that. I'll be back on Wednesday. Thanks for being here. Check out my opening call. I think
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.